Hello everybody, it's me the Boss Hog, and this is my stock portfolio review for the end of July 2021. Let's go through it. Okay, and so now onto a high level overview, and it's official, the streak is over. I started in late November. Since then I've been profitable every month until July. It helped because I started off super conservatively and gradually got more risky. But last month it just wasn't to be, and actually was a pretty brutal month in places. I really struggled to pick my favourite moment of last month. Required a little bit of mental resiliency. You know, the trades didn't seem to work. I'm overly optimistic, I guess, compared to market consensus on recovery. And even though I felt like I was getting some good buys into some big stocks that I own, I felt like I was doing knife catching at times, to be perfectly honest with you. So it was probably the hardest month I've had for a few months, maybe since I started. I'm not sure, but yeah, I really struggled to actually pick my favourite moment last month. And if I'm frank, nothing really stood out. That probably includes dividends, actually. Like, you know, you kind of want to be getting this snowball as you go through dividends, but I had a bit of a pullback last month. Now, in fairness, I did have a little bit of a review of my dividends and realised that just by luck, not really intended, but you know, the April, July, October, Jan, that kind of quarterly payments just don't really do very well. Like my all my stocks that pay dividends in those months are not so many, and it was something that only dawned on me really when I saw a lack of dividends come in. So in fairness, although it looks pretty disappointing next to June, if I compare it back to April, it looks pretty okay. Especially considering that April and October is more often when UK stocks, which typically just pay twice per year, pay. So April was also helped a little bit by that fact. But yeah, it was a bit disappointing even on that front as well. And yeah, I continue to struggle against both indexes. Up until June, I was running ahead of the FTSE quite comfortably and was gradually reeling in the S&P 500. The last couple of months has just gone backwards, basically. And again, that's primarily because I'm overly optimistic compared to market consensus on the recovery. So, and I think I still stand by that. It does get harder as the time goes on. So I would say on the good side, my portfolio worth 79,000. Still comfortably in profit at 7.2k, but that's actually fallen back about 300 quid in terms of my profits. So obviously that's disappointing, but no danger of turning negative or anything like that. So yeah, it is what it is, I suppose. Can't win them all, and in a way, you know, if there is one silver lining, I've become a little bit almost like obsessed over the last 8 weeks of keeping my streak going. Like, I was checking my portfolio too much. It was like, you know, when I just about made money last month, yeah, I had to kind of go away in the middle of July and kind of give myself a bit of a reality slap, you know, that I couldn't be making 3% profit every month. You know, that's like sort of 40% annualized a year, which is kind of what I had for a few months. And I just kind of needed a bit of a reality slap. When I looked at my performance month on month, it actually made me feel a lot better. Realized maybe I've been running slightly ahead. Now maybe I'm running slightly behind, and you know, if I back myself in terms of thinking that the recovery play is there, I'm just maybe slightly ahead of the curve. Maybe that's a mistake, but I still think I'm still quite optimistic about the recovery, you know, over the next couple of years, and so I'm using this as a chance to maybe buy up some stocks that I think are good, belong to good companies. So trying not to overthink it too much. There is that silver lining, and I just have to kind of back myself, which I hope to do, and try and keep the faith in that approach. So that's kind of how I'm feeling at the moment, though. Not always easy investing, apparently. All right, let's have a look into a bit more detail. All right, so still on the high-level summaries. I'm not going to waste too much time on this slide because I feel like I touched on a lot of it. You can see there in the graph, this is time from older to newer. So on the right of your screen is the newer stuff. And you can see there in the middle of the month, it was just pretty savage. I guess the one thing that I would add is my UK holdings. I realized about a month ago, I'm basically overly indexed in UK holdings on recovery, like really heavily. And what this basically means is that whatever the FTSE All Share does, I free exit, or 2.5 exit maybe. So, you know, if it goes up 0.5%, I'm going up like 1.2%. If it goes down 0.5%, I'm going down 1.2%. And roughly, I haven't run the numbers, but that's kind of what I'm seeing anecdotally when I do look. And yeah, my UK holdings, they're travel, retail, leisure, mining, and financials, actually, rather than banking. It's more insurance. But yeah, it was that was just savage. That felt pretty awful, actually, just how quickly my UK shares nosedived. They recovered pretty quickly, and again, I did average down into some good deals, I felt like. But yeah, the middle of the month was quite challenging, and you can see that it hasn't fully recovered to my highs that I had in June. So not much more to add beyond that, really. All right. So yeah, disappointed that I lost ground, as I touched on a few minutes ago. So I won't go into too much more detail there. Numbers are on the screen for transparency. The good news is here is I'm still outperforming 3 of my 4 targets. Just as a reminder, that's beat the bank, beat inflation, beat 8% long-term average, and then beat the market. So those are my 4 aims. They're not time linked or anything like that. I didn't want to put that much pressure on myself, but over the next few years, I hope to get better at investing. So 9.4%, I'm still beating 3 of those 4. But you can see here against the market, I'm underperforming at the moment. You can see there, numbers have been provided. In terms of the FX, I am trying to manage the FX a little bit. I got pulled back. The dollar got a little stronger, which I guess is bad in a way, because it means I can't enjoy the currency fluctuations down as well. And I did also buy some US stocks that I felt like were a bit weak, so I actually pushed up my own average of break even just slightly. Still sitting on a £111 FX impact, so that's fine. But nothing really material actually this month. It got reeled back quite a lot, I would say. Yeah, worst performer continues to be GAN. This is actually worse than it was last month, but we are nearing its quarterly earnings, so this does seem to be a theme. I was given enough confidence in GAN's last quarterly earnings to think that they might, there's some potential there. It's definitely a high-risk stock. I have GAN and Genie. Similar-ish, I think, but GAN is slightly safer. But they're my 2 riskier stocks that I have remaining at the moment. Yeah, in terms of my portfolio, I'm actually down to 36 holdings now, which is good. And this looks pretty bad, to be honest, like 15 out of that 36 being red. I've listed them all here. Feel free to read. I have been trying to do weekly video updates as well. A bit slow this week just because I have a new job and month end, which is a job that I have, as well as having new tech to deal with as well. So I've been a bit slow on that front, but there will be a 2-week catch-up video probably tomorrow. But you can see here as well that I've listed these. Pretty confident on most of these. If anyone has any questions about any of them, feel free. GAN here is definitely my most nervous one. TEP is Telecom Plus, sorry. It's a FTSE 250 company. I did have a reread through their numbers just to make sure that I wasn't kidding myself with my sort of 13.50 buy price. It's actually down at like 10 at the moment, 10.20, something like that. So, and I work in telecom billing, so I feel like I understand this business relatively well. And yeah, I'm just averaging down, basically. I feel like it's being a bit misunderstood by the market, or people aren't getting it or something. I'm not really sure. It's very unsexy stock, to be fair, but it's fine. It does yield pretty well at the moment as well. It's like 4.5%, so I do have some comfort from that. But I do think it's a capital growth opportunity. Huntsman there, I mean, they released their updates. I really like this company. It's like Sleeping Giant. And my only belief is that it's like a chemically difficult to understand company. It's like advanced chemistry. And I'm not a chemistry expert either, but I can read the numbers. But still, I mean, the earnings reports are quite intimidating, to be honest. Lots of enes and, other hydrocarbons and magical stuff happening. But, I can see the numbers, and I think I've got a lot of hope for that business. EPD Pipeline, I'm buying because it's 8.5% yield at current pricing, so why not? Genie is a software company. It's kind of software and big data and gambling, which I'm quite a big fan of. It did have a rights issue at $19. I actually have a target here in the low 20s. I'm not too confident pricing businesses like this because it's basically still in its early stage. So somewhere between 21 and 23. Had a rights issue at 19, which caused it to crash. And since then, I've basically been buying, under $16. So I'm pretty happy with that. And I am actually now profitable, considering I'm a week into this month. But when I recorded this, I wasn't. Legal & General is a insurance slash financial services company in the UK. Also green on this today, but at the time I wasn't. And National Express is very similar as well. So I am optimistic on these moving forward, not just because I have a crystal ball at the time of recording, but because I think I've actually picked up some good companies relatively cheap. So I'm not overly worried, even though this does look a bit terrible with 15 out of 36 of my holdings in the red. All right, let's move on to more details. All right, so you can see here, just as a reminder for anyone who's new or doesn't remember, I arbitrarily divide my holdings into 5 levels. I've nicked this from PPC Ian. 1 is the safest, 5 is the most risky. My plan here is to have 60 to 80% in level 3, and then 10 to 20% in 4+5 and 1+2. I guess a couple of things that are a bit notable. I trimmed back my core free holdings. That's mainly to move into slightly higher risk. Level 5, it did rise as a percentage of my portfolio, and that's really just because, as I touched on beforehand, I was averaging quite aggressively into Genie. Really happy to have my buy price under $18 at the moment, so that's great. Haven't been adding to GAN for quite some time, just because it's too risky. It hasn't really proven itself to me. But what it meant is basically my portfolio value for 4+5 increased, or 5 in this case as we're looking at now, but my profit actually decreased. Similar to level 4 actually, where I was adding into National Express and Telecom Plus, these two UK companies, and yeah, profit was actually flat here, marginally up, but just other movement elsewhere kind of pulled it down, so fine. I'm not going to touch on level 3. So level 2, just one holding at the moment. I haven't actually found an opportunity yet to average into this company. It just keeps falling. I'm really glad I went in with such a small stake relative to my portfolio, because it's down pretty hard, like 15%. But luckily 15% only works out at 20 quid. And the other numbers in here, they're from like previous holdings that I had. So this is like total profit, right? But in terms of my unrealized, it's sort of minus 20. And then level 1, it was unchanged, but actually my profit went down quite a lot. This is mainly because of Vistra, which I think I have a good buy price on, and I'm still pretty green on it, like 12% up even after the pullback. So fine. And EPD actually has become my largest stock, I believe, because I keep buying it. For me, it's just it's about 15 to 20% undervalued, and I get 8% yield. And because I'm a UK investor investing in an MLP, I don't have to pay any tax on it. So that's pretty sweet. So it's 8.5% pure take-home money. So for me, that's awesome. And yeah, overall, it's interesting to see, because I never actually monitored this during the month, so it's always a bit of a surprise to me at the end. And really what I'm starting to see here is my level 3 is getting closer to the lower boundary, right? 60% target. And I'm sort of seeing a polarization in my level 1 especially, and my level 4+5. So for me, that's pretty interesting to see. I did start to introduce a lot of polarization into my portfolio from around March. So this is it just kind of drifting down as level 3 becomes a smaller part. Still a huge part. It's still the main part. You can kind of see also by customer counts, right? Sorry, company counts. 26 of my 36 holdings are in core companies, blue chips, reliable payers, etc., etc. So, and then I've got my my infrastructure and my etc. in level 1 and 2, and my riskier sort of either recovery plays for level 4, a lot of them, or level 5, which is fairly unproven businesses at this stage. Well, I am actually quite confident in Genie, and my stake in Genie is now sort of about nearing 5% of my portfolio. I think we'll see at the very end. But it's starting to become a relatively big holding, and I am increasingly confident in it as a business. So we'll see. Okay. All right, so I'll try and go through this slide relatively quickly and just focus on the things that have changed. I would say at the moment I'm pretty heavy in financials. This is really because I've been buying Huntington Bank shares, especially. This is now top 3 holding for me, I believe. I just think it's crazy undervalued. I couldn't believe I got to pick it up in like the $13. Again, I listened to their earnings report. It was weird as well that as soon as they announced the the crystallization of their large acquisition, stock price just crashed. Don't really know why. It shouldn't have been a surprise to anyone. Their latest results are a little bit difficult to read, to be fair. I have like some accounting qualifications, nothing major. It's not my day job, but I also found it quite hard going. But I can read and take my time through it, and I felt really confident in Huntington Bank shares. I have a $17.20 price for this, so I kept buying, averaging down. And again, that's now green if I use my crystal ball and project this forward to the 7th of the month, as it now is. Aviva UK insurance company, as is Elgen. I just think actually the UK has got some great insurance companies. Between those two and also a company called Phoenix, I have 8% of my portfolio in those 3 insurance companies. So I just like them basically, and I think they're undervalued. So I just keep buying. So I did trim my technology. I did it deliberately, right? It wasn't an accident, but it wasn't something I planned out to do at the start of the month. It was mostly to fund buying opportunities. Like I was up sort of 20% on a lot of my technology. I felt like a lot of it was reasonably overpriced or optimistically priced. I would say the exception was Amazon. I was quite conservative on my buying into Amazon. I had one share exactly at something like 32.70. And for me, it was a good opportunity. I think people getting a bit overly excited about Amazon, in honesty. It's a good company, don't get me wrong. I like it. It's a material holding for me. But when I saw their results, I wasn't as disappointed as others. And when it went down to, I think it was 33.20, I timed it pretty well. I basically used that as a chance to add 0.4 shares, something like that. And that averaged me up to 32.98. So I managed to just about keep in the 32s. I'm really happy with that as a price point. I also sold half of my Microsoft and Apple. I like both of these companies. And sold out of AMD entirely. I did feel slightly silly of AMD because I sold out like 91. Obviously, that's since shot up. I guess I was always into AMD for like trading rather than investing. I entered into AMD at $73, and I had a price point of 90 to 95. So when it hit 91 and I had an opportunity to crystallize my win, I took it. And then they produced these incredible numbers, right? And the stock went up like another $20 or whatever it was. I stopped looking because it was depressing, especially when I had a difficult month. It just felt like one of those bad decisions. But what can you do? And I would say the other thing that's worth highlighting as well, my transportation slice is sitting at 8%. This is almost entirely because of National Express. If anyone's watched my weekly videos, by misunderstood, I mean that like it's overly seen as a COVID recovery stock. Yeah, sure, it's influenced by COVID, but there's a really great business that's kind of improved itself over the last 18 months. Earnings are actually up on pre-COVID levels, even if revenue still hasn't recovered. And I just think it's a business to invest in for the future. This actually is a long-term holding for me. I still think it's like between 30 and 50% undervalued, even after it recovered following the mid-month crash. So yeah, this is currently how it's looking. Any questions, feel free. I'll do my best to answer. I think I'm quite comfortable with this slice. Like, I know it looks a bit weird at the moment, and that's mainly just because I feel like I've been buying things that felt cheap and recovery stocks. But again, I believe in the recovery is gathering some momentum. So I'm just slightly heavier in there than you might expect me to be, and I'm comfortable with that at the moment, I suppose. So yeah, as I touched on much earlier now, quite a month for dividends. I actually had a reasonable number of dividends, but none of them were particularly massive. So it is what it is, I suppose. In terms of changes, you'll see that I've got the number of dividends in the left column and the number that I have today. So this would have been at the end of July, rather than the 7th as it now is. But yeah, so I guess just a couple of things to call out. So First National and Games Workshop, I like both these companies. I sold just to trim some profit and buy some other things on the weakness, but I'm like both the companies, so I continue to buy them. Vistra, I'm happy with my average, so I'm pretty happy with my 300 shares at the moment. I don't see a need to buy more. And it's not without risk, by the way, Vistra. I took on a lot of debt. I just think that the market reaction was overdone considering the amount of debt it took on. Happy with that. Tellus here, I sold out. I mean, my Tellus shares have been all over the place. I've been as high as 150 and currently down to 1 in terms of the 7th of the month, where I've been using Tellus a little bit like as a store of value. If it ran up, great. It seemed like a very safe stock for me to put some money in, collect some dividends. So that's been all over the place. And also Bank of Nova Scotia, BNS. Again, that's also been a bit chunky, all over the place, I guess. And what I tend to do with this one is anything that's left over, like rounding errors and stuff on stocks, I just chuck it into BNS. So it's very slowly growing. Yeah, Huntington Bank I've already touched on. So a large holding now, and also, I mean, that is I put 310 here. Again, this is a week old now as I look at it. I actually have 600 shares in that company now, so I definitely was using it as a buying opportunity. That's one of my largest shares. Again, Huntsman, I've already touched on. I'm not going to go into more detail here. Pets is an interesting one. This is UK Pets, by the way. I know there's like PetsMed in the US. This is Pets at Home. I decided to sell out, and whereas with AMD I got it horribly wrong, actually with Pets I really nailed it. I sold close to the top just before an earnings report. The earnings report was solid, but couldn't support a 60 PE and a share price that had overrun, in my opinion. I sold out at something like 496, and it topped out about 503. I felt I was really disciplined buying here. I wasn't buying above 420. I was thinking of selling as soon as it got to about 460. I already thought it was expensive, and decided to sell out with my 20% profit. It's a fine business, by the way. I just think all of the good news is already priced in, and there can only be bad news for it, basically. This one I was super happy with. I felt like I really optimized my sales point. I got an £11 dividend out of it as well, and now I completely sold out on my position. I do have a buy price back on it, watch list 420, which is where I think it's got enough safety margin to make some money. Anything under 450 I think is a fine price for this business, but 420 would be my entry point. So that's my rationale this month, basically. All right, and yet just for full transparency, here is a list of all my positions as of the end of July. My holding, both as pounds and percentage, and my profit at that point. Yeah, 36 positions at the moment. I'm actually really happy with that number. I even don't mind adding a couple at this stage. There's still a few things that I can kind of trim or etc., but you know, right now I'm happy with that. To be honest with you, this is the first month I think since I can record that I didn't have any deliberate swing trading. I definitely sold out some profitable positions. It wasn't like I wasn't doing any trading, but you know, it was basically just to average down into long-term investments. And actually, this is my lowest month for like net trading. So you know, I sort of had I don't know, about 12% of my portfolio traded this month. You know, that's outside of new. I mean, like stuff that I had last month and then sold. That's comfortably the lowest percentage that I've had since I started. So yeah, I just didn't do much trading this month, although it helped apparently. But yeah, so that's worth calling out. In terms of large purchasing, I think most of these I've already covered. EPD covered, HBAN covered. Oh, Fever Tree is an interesting one. So this is a UK mixer for alcohol. It doesn't do alcohol itself, just the mixers for alcoholic drink. This is a very expensive share, to be honest with you, and every quarter it publishes numbers that I deem to be respectable, all things considered. And every quarter the market just has a meltdown and goes down like 15%. So I seem to just add Fever Tree once a quarter. Yeah, it's an expensive stock, but if you believe in the future that they've kind of laid out in terms of international expansion or retail sales or picking up additional mixers for other alcoholic drinks outside of gin, then I think I'm kind of relatively optimistic on the Fever. And you can see there actually is my 6th largest stock at the moment, so I added quite materially to it following that. National Express I've touched on already, Amazon touched on already. Genie touched on, Aviva touched on, Telecom Plus I think I've touched on, and Huntsman Corporation as well I've touched on. So those are my pretty sizable ads last month. But if anyone has any questions about any of my holdings, feel free to ask. Just the one thing to add for any new viewers, you'll see here my profit looks a bit weird, especially on like the smaller holdings like Broadcom. My profit here is realized and unrealized, so it's like with Broadcom I swing trade Broadcom, not that I've had a chance to do it for a couple of months. So you know, it's basically, this is showing the profit of any active positions I have at the moment, right? Whether that's profit I've made in the past or profit that I'm sitting on unrealized currently. So some of the smaller holdings especially look a bit wonky, but just to make everyone aware of that. Okay, and that's everything. I do try and keep these videos under 20 minutes, but I keep failing. It's one of those things I aspire to be better at. But let's wrap up anyway. That's everything I have for the details. All right, so yeah, as I said, that's me wrapping up. It was a difficult month, honestly, mentally quite straining. As I touched on as well, I was moving jobs, so that's always a little bit stressful, right? And didn't actually have a chance to really manage my portfolio as well as I might have done. But honestly, I think I would have made similar decisions even if I could have done that. And yeah, overall, I just kind of like, I try and back myself, I guess. Like all of my very negative positions during the month, like Huntsman or Huntington, National Express, Telecom Plus, EPD. Like I read a lot of company financials. You know, I spent at least an hour on most of those, on all of them actually, and you know, slightly longer on a couple of them, like Huntsman, which is difficult to get your head around. And I was like, there's nothing here. Like there's no reason why any of this changes my opinions about the company. Like them before, I should like them now, and in fact I should like them even more, right, if the share price has gone down. So this was the first month really, maybe since I first started and I first saw, you know, a lot of profit getting wiped out, but the first month I think still that was like the hardest month I had, where I really sort of questioned myself, like, have I fucked up here? Shouldn't swear probably on YouTube. Have I messed up here, right? And I guess and it was about 2 weeks ago I did something on a Discord group where I just sort of like broke down my profit month for month. And I was like, do you know what, like I'm running ahead of all my realistic targets, right? I've only been investing for 9 months. Maybe it's okay if I don't make money once in a while, right? And I was like, okay, do you know what, like I just have to stick with my guns here, get a bit of a reality check and keep on investing. So that's what we're going to do. And hopefully we'll see a pickup and an improvement next month as well, but let's see. All right, thank you very much for sticking with me for 25 minutes whilst I did far too much moaning. Hopefully that was useful, or you like to live vicariously through my investing. Either way, thank you for joining me. I've been the Boss Hog, and enjoy your evening. Bye for now.